Welcome back to Real Talk Investing. In today's video, there are a number of topics I want to cover. First being what is going on in the stock market. The stock market has been dropping pretty dramatically the last couple of days. Is this the bottom? Is there further correction ahead? What is leading to this downturn in the stock market? Where has the momentum gone? I'm going to be getting into all of that today. As you can see, my portfolio right now, today we dropped just over 2%, down a little over $1,300 down to $58,000 in my portfolio. The past week though has been pretty crazy. As you can see, last week we're down almost 10%, down $6,100. So we're going to be getting into exactly what has happened in my portfolio, what's going on with my positions. I also want to cover Hims and Hers Health. Hims reported earnings today, and I actually thought their earnings were pretty decent, but after hours, the stock dropped an additional 16%. Friday, it dropped huge. I think the stock was trading right around $70 just a couple of trading days ago. And here we are today. When I took this screenshot, it was at $43. I think it's actually down to around $41 now. So we're going to go through their earnings, things that I really like to see. There are, obviously a couple of concerns, and that's why the stock has dropped so much. We'll go through all of that. And we'll also get into whether or not I think we're getting close to a buying opportunity in Hims. Lastly, we'll go through Palantir. Palantir is a large position of mine, and it has been decimated over the last couple of days. We are now down $30, 25% in just the past week. We were trading at just around $125 right around here, and now we just broke 90, which is absolutely crazy. Is this one a falling knife? What should you do with it? Is it a buying opportunity? We'll get into all of that. So I want to start out by going through my portfolio. I think a lot of the stocks I am currently in are positions that a lot of retail investors are either invested in or interested in. The majority of my portfolio, I am still up big overall. Some new emerging stocks are starting to perform well. And then we also have some that have fallen off a cliff. So starting out, Palantir, I still own 100 shares of this one. It did drop 11% today. Actually, over 11%, because I think it's trading around $88 right now. I took this screenshot when it was at 90. Still up 750%. SoFi down 2% today. Still up great on that one. Not looking to sell any SoFi. AMD, I actually added some today and last week. I'm up to 75 shares, just a little over $8,000. I guess $9,000 invested, as I am down 11% overall in AMD. This is one I'm still very bullish on. Shopify traded flat today, still up great. I would actually welcome some weakness in Shopify, as that's a position I'd love to grow quite a bit larger. But it's hard for me to pull the trigger up this much already. Nike's actually, I'm actually up now in Nike. Nike's up 5.15% today. This comes off a couple of analysts that changed their rating from hold to buy and set price targets over $100 a share. So Nike, that's obviously exciting to see. I'm glad to see some momentum in Nike. I think I'm pretty close to happy with the size of this position for the size of my portfolio. I have about a little less than $6,000 invested in Nike. So I am happy with the position I built in Nike, and I'm excited to see where this one goes moving forward. Amazon down about 2% today. Tesla, this is one I've been selling recently, down 2% today. Estee Lauder had a great day, up 4.5%. Now I'm up about 11, almost 12% in Estee Lauder. Celsius was down 4% today. That's after their huge move up last week when they announced during their earnings that they will be buying Alani Nu. And then there's Hims, which reported earnings today. Hims is one that I have been selling as of recently when it was in the upper 60s, $70 a share. Hims is down today about 14.5% after reporting earnings. So a lot of red in my portfolio. That is obviously attributing to the 2% down today and then the 9%, almost 10% down over the past week. So I'm down pretty big. What's going on with the S&P 500 over that same time frame? The S&P 500 over the last week is down only 2.26%. Looking through the heat map for today in the S&P 500, you can see that, it's pretty much 50-50. A lot of, half the stocks are up, half the stocks are still green today. Looking at the Mag 7 though, it's pretty much red across the board except for Apple here. It's interesting to see semiconductors right across the board. I'm obviously anxious to see what NVIDIA has to say this week as they report their earnings. That one could be a sentiment changer in the market. If they come out and crush their earnings again, that could be a turning point, and we could start to see the market in general start moving up. Looking through the Mag 7 though, like I'm not nearly as worried about the market dropping super dramatically over the next month or two, because none of the Mag 7 stocks really have a crazy high valuation. Like Google, Meta, Amazon, Apple, Microsoft, even Nvidia, like none of those are crazy overvalued. Tesla, you can make a case, is slightly overvalued, and Apple's Apple. It's been on a run, but I would not be surprised to see a pullback in Apple. NVIDIA, we have earnings this week, so we'll see what happens there. So one of the main reasons why we are starting to experience some weakness in the stock market, in the markets in general, is that consumer sentiment has dropped and inflation worries are somewhat back. So the University of Michigan's Consumer Sentiment Index was 64.7, down from 71.7 in January. This is definitely a sign that consumer confidence in the US has slightly decreased. On top of that, we have Trump with his glorious tariffs. He is planning on moving forward with his tariffs on both Canada and Mexico, which does lead to concerns about higher inflation moving forward as we do start to see some of these goods prices move up with the tariffs going into effect. So right now we have some bad news, some bad sentiment in the market. For me as an investor, not a trader, I see any weakness in the stock market as a buying opportunity. I will welcome any decrease in the stock market, as I would love to scoop up some additional shares. I saw a comment the other day that definitely relates to how I feel about the stock market. And the comment was something along the lines of, traders see a market crash, investors see a buying opportunity. And that's definitely, how I feel. I will welcome any good deals in the market. I'm ready to move on any companies I think are undervalued and represent a great risk reward over the next couple of years. So that's a little bit going on with the stock market. We'll see what happens going forward. NVIDIA, I think, will have a great impact on the market this week. If they blow their earnings out of the water, it could definitely, jumpstart some of these other stocks that are dropping lower. Next up here, let's talk about Hims and Hers. Hims did report earnings today, and their stock price tumbled a little over 18% after hours due to a couple of factors such as miss in gross margin and concerns about the GLP-1 business, which is a weight loss compound that Hims has been offering. And I'm going to get into that, as that is one of the main reasons why we've seen some weakness in Hims as of lately. I am a Hims shareholder. I did sell some of my Hims position while the stock had quite a bit of momentum last week. I think I sold 33% or so of my holdings, right around $60 or $70 a share, right near the high. So that was great timing on my part, and I'm definitely grateful I took some profits off the table on that one. First off, let's get into what this compounded semaglutide medication is that Hims and Hers has been offering. So in May, they started offering a compounded semaglutide, which is the active ingredient in Novo Nordisk's blockbuster GLP-1 medications like Ozempic. Hims, has obviously been on a massive run over the past year, and this medication that they've been able to offer over that time frame definitely plays into the success that we have seen into Hims. So this compounded drug, they are custom-made alternatives when brand name drugs are hard to find or in shortage. So basically, Novo Nordisk still owns the patent on this GLP-1 medication, but because it was such a high demand medication, the FDA granted other companies to make a compound, pretty much a drug similar to the GLP-1 medication that Novo Nordisk uses. That has been a huge success for Hims. And then this past Friday, the FDA did come out and say that the shortage is over and that any of these compounders who are making this compounded semaglutide have 60 to 90 days to wrap up on this drug offering that they have been taking part in. So yeah, Hims will no longer be able to offer this semaglutide compound starting sometime in Q2. So they are having to wrap up that section, most likely, of their business for the time being. Luckily though, Hims and Hers is much more than just a weight loss prescription medication company. So Hims also offers treatments for skincare, mental health, sexual health, and hair care. So excluding this GLP-1 offering, revenue still increased 43% in 2024 to 1.2 billion for the full year, which met their previous revenue target for 2025. So they're a whole year early on their revenue growth, which is amazing to see. Looking into their actual earnings that they reported today, they beat on both earnings per share and revenue, with earnings per share coming in at 11 cents versus the 10 cents expected. And then revenue for the quarter came in at 481 million versus 470 million. So those are obviously great to see. Looking at their revenue for 2024 as a whole, we can see that revenue came in almost at 1.5 billion, up from 872 million the year before. Net income also exploded for the quarter, up, what is that, like 25 times over the past year, up to 26 million versus 1.2 million in the same quarter of 2023. So much of what they reported was great. Hims did report a slight miss, I guess, or reduction in their gross margin. I think they dropped from like 78% down to 76 or 77%. So not massive, but Wall Street and retail, I guess, did not like that miss in their gross margins. And I think you pile that on with the whole GLP-1 semaglutide offering that just led to the sell-off that we have seen so far today. It's also amazing to see the growth in free cash flow for Hims. For the quarter, they're up to 59.5 million in free cash flow, up from just over 10 million in the same quarter in 2023. And then the full year free cash flow came in right around 200 million, up from 46, almost 47 million in 2023. So looking over some projections that I've put together for Hims, I think they're actually set up pretty well for the future. And at the current price of right around $41, I'd say they're either close to a buy or a buy. I actually did scoop up some additional Hims shares right around $41 today. Not very much, because I could see it dropping into the 30s potentially. Just I'm interested to see how this one opens tomorrow. If it does drop at all into the 30s, I'll be a buyer. I think overall Hims is a buy for the years to come. Looking for through at the 2025 guidance that was given, we can see that they are expecting revenue for 2025 to come in at, I think it was between 2.35 and 2.36 billion dollars for 2025, which is revenue growth of 57%. Net income, they were also expecting to come in at around 252 million, which is up 100% compared to 2024. Net income margins growing from 8% to 11%, which is great. And then that would put full year EPS right around $1.15. With the PE ratio currently at 71 for Hims, I think it's pretty fair to have expectations for Hims to be between 50 and 60. And with the revenue and net income that they are expecting, that would put the stock right around between $70 and $57 a share. So an average price target for me is what I'm expecting for 2023 for them to get back into the $60. So at $41, I do see this as a buy. There is definitely quite a bit of upside that we could see throughout 2025. Keeping somewhat conservative revenue growth, I'd say for the years to come with Hims, I do have them growing their revenue between 25 and 40% over the next 3 or 4 years, getting their total revenue in 2028 up to 5.5 billion with a net income of 35% at 690 million. So with a PE estimate between 30 and 40, that would put the share price between $94 and $126 per share, with an average price target of $110 by 2028 and a market cap of just over 24 billion. So yes, Hims has gone on an amazing run. Yes, I took some profits when it was around $70 per share, but I also think that in the 30s and 40s, HIMS is a buy just with the amount of revenue growth that they are expecting as a company. Next up here, let's quickly talk about Palantir. Palantir has been crashing like crazy over the last few trading days. It is the definition of a falling knife, and analysts are telling everyone to stay away from Palantir. What exactly has led to this sharp decline that we are seeing within Palantir? So this decline comes as investors grow increasingly uneasy over potential US defense spending cuts under the Trump administration. I think they are planning on cutting something like 8% from defense spending. And I think a lot of investors and Wall Street are worried that that is going to negatively impact Palantir. That's something I disagree with. I don't think Palantir is going to be something that's cut, as I think Palantir is helping to actually save quite a bit of money within the defense spending. So that one's not as much of an issue for me. It's the CEO's plan to sell up to 1.2 billion worth of shares. On top of that, that has really spooked Wall Street and has led to the sell-off that we have seen over the last couple of days. So currently, as you can see, Palantir is trading under $90, which is absolutely insane, as this one was trading at $125 just 5 days ago. It's down 25%, and a lot of people are wondering, when should they buy into Palantir? Down 25%, that's a pretty big correction. Is it going to bottom soon? Is now the time to get back into Palantir? Are we going to see the hundreds, 110s, 120s again anytime soon? In my opinion, this drop is not that big of a surprise for Palantir. Palantir's valuation was absolutely insane. I think their PE is something like 460. There's way too much growth already priced into Palantir, and even at these levels, I don't think Palantir is a buy. Looking through my estimates for Palantir, revenue, on the left here, we have their current 2024 financials. Last quarter was impressive from Palantir. They grew their revenue something like 36% year over year. So, there's a reason why Palantir has been on such a run, but it's still priced way too high. With a PE at these current levels of almost 460, we would need to see revenue growth come in much higher than they are expecting. For 2025, their revenue estimate came in right around 3.75 billion, which would represent a 31% growth for 2025. And even with a low PE of 80, high PE of 120, the stock would only be priced, around $23 to $35, which is far below what we are currently seeing with Palantir. In order for Palantir's price to make sense, we really need these numbers to be 40% plus. I do think Palantir will be right around $4 billion for 2025. I think they are sandbagging a little bit, which would put them at, around 40% growth. But, even if they keep that 40% growth throughout the coming years, and let's say that, they're growing their net income, their bottom line is growing by 55%, that's still, it's the valuation just still isn't super attractive on this one. That is one of the main reasons why I have been taking profits in Palantir. I probably should have taken more, but it was hard to. Palantir is on such a kick. Seemed like every day they were up 8, 10, 12%. Their stock price exploded from $80 to $125 in just a couple of weeks. So it seemed like it was going to just keep going. I did take profits, which I'm glad I did. I took some around 100, 120, 115. I still have 100 shares. I'm not looking to take any more off the table right now, but I would definitely not suggest purchasing anything at these current levels. I would not be surprised to see Palantir drop down into the 70s or even 60s over the next few weeks, and I could see myself maybe being a buyer at Palantir around $60. That would represent quite a bit more risk reward opportunity in Palantir, but at these current levels and with the expected revenue that Palantir did release during their last earnings call, the numbers just aren't there to justify Palantir as a $300 billion or $400 billion company. So I'm going to be kind of just watching this one closely. Any spikes, I could see myself taking some more profit. And if it continues to drop, I'll be a buyer at around $60. So that's all for this video. Thank you all for being here. Thank you for those of you who did make it to the end of this video. Let me know in the comments what your thoughts on everything going on. Are we about to enter a bear market? Do you see this being more than just a slight correction in the stock market? Are we in for a recession in 2025? Let me know what you think. Let me know what your thoughts on HIMS and Palantir as well. So thank you again, and please like and subscribe, and I will see you in the next one.